Hey everyone, welcome in to another daily editorial. Here on the KE Report, we're going to be focusing on the precious metals with gold moving even closer to that 2,300 level. Silver right now, right at $26, and the action in the underlying gold and silver equities continues to be strong, following through from what looks to be a pretty significant turnaround in March. We're chatting right now with Dave Erfle, founder and editor of the Junior Miner Junkie. Dave, looking at gold, $2,286 right now on my screen on the futures, silver up to 26. This is in the face of a dollar that has been stronger. However, it's off a little bit today, but just under that 105 level. Markets are also selling off. The S&P, Dow, Nasdaq, those are down right around 1%, if not a little bit more. Bitcoin's also selling off. So look, it seems like money is clearly rotating into the precious metals right now. Dave, what's more important in your eyes? Gold moving closer to 2,300 or silver testing out this $26 level?
Yeah, I think the silver going up now to that 26 level is the most important here because we take a look at gold. It's basically trading on momentum now, right? It's got no overhead resistance for the first time in 4 years. So we've got a major breakout. We had a confirmation last Thursday before the Good Friday holiday, a daily, weekly, monthly, quarterly close well above 2,100. That was a confirmation of the breakout. So now it's basically a momentum play now, right? And the 2,300 looks like to be the next level of resistance it needs to get above. But silver, yeah, I mean, silver closing right below $26 in the futures today, right? So last week we had the clue of the gold stocks starting to distance themselves and outperform silver because we've had silver and the gold stocks pretty much trading in tandem, showing relative weakness to the gold price as it continued higher. Last week we saw the gold stock show relative strength to silver, and now this week we're starting to see the silver price showing relative strength to the gold price, and silver stocks really starting to a lot of silver stocks showing some strong white candles there because they've been completely beaten up and depressed. So yeah, and you've got the GDX and the GDXJ right at overhead resistance. In the GDX, it's at 32-33 area, and the GDXJ, it's at 39-40 area. It's stopping to take a breath there. But while it's doing that, you're seeing a lot of these deeply depressed quality juniors with strong white candles yesterday and today. So I basically use my portfolio as a barometer because it's I've basically built my own junior ETF since you really don't have a barometer ETF for the juniors anymore. So my portfolio, the GMJ portfolio that I also cover for my subscribers, it's outperforming the GDXJ now, and the GDXJ is outperforming the GDX, and both GDX and GDXJ are outperforming gold. And now you've got silver added onto that, but it's only one day. We need to see follow through. We need to see that 26 level closed on above, especially on a weekly basis. And I think then it could shoot to 28 pretty quickly. And with these silver stocks finally starting to take notice and starting to move higher, I think that's a sign that we're going to see 26 broken this week.
Yeah, Dave, it sure is nice to have a call like this with you guys where we see the mining stocks outperforming the metals, silver finally outperforming gold, and the silver stocks finally getting a little love. So you are the junior miner junkie, and you do cover a lot of different stocks, as you say, for your subscribers, but you got a good lay of the land in the space. You're at the conventions, you know the companies out there, the good, the bad, and the ugly. What would you say to people that have been resistant to get into the mining stocks, possibly for years, because they've actually been underperforming for so long? Now that the worm is turning in the sector, what kind of advice would you give people looking at the moves in the stocks, and which stages of companies do you expect to make the moves at different times as this cycle plays out?
Well, if you're a newbie and you're just getting into this sector now, you pick probably the best time since 2016 when we had a situation similar to now where the gold stocks are trading the cheapest in relation to the price of gold ever. And I didn't think I'd ever see that again. Well, here we are. We've got that situation again. So if you're just getting into this sector now, you should have a strong base of a basket of the best miners and royalty companies. And you start off with that. And then you add a couple of mid tiers, Then you start going into the developer explorers, the quality developer explorers. That's basically what I've done. So my strong base is my SEP IRA account, which I also share with my subscribers. That's where I have what I feel is the best miners and the best royalty companies. In the JMJ portfolio, I have some growth oriented producers and mostly developer explorers. I have a few higher risk early stage companies that are at the PEA stage. So they've already made a nice discovery and they have a defined resource and they're at the PEA stage. So I haven't gotten into early stage companies quite yet. So that's basically where I would start. I would start with the majors and the royalty companies, and then go into some mid tiers and some developers and some late stage developers, and then I would still avoid the early stage plays at this time.
So something that we've been talking about, Dave, is the constructive nature of that turnaround from last month. The gold majors started to move. The mid tiers, some of which were already moving, those picked up. Juniors, those have also started to move. I'm seeing across the board at least 20% rises in a lot of stocks, if not way more than that, and all of it on better volume. What about these stocks that haven't moved that much? Say they're only up 5, 10, maybe only 20%. When you're looking around and seeing these other stocks that have outperformed, is that the market telling us that those are the quality stocks that have already outperformed and we should be avoiding these smaller stocks or even the larger ones that just haven't moved to that same, let's say, 20% plus degree?
Well, it depends on their own situation. Let's face it, most of these companies still need to go away. 80-85% of them I wouldn't touch. But the quality ones that haven't moved yet, it's probably because they don't have enough money or the market is waiting to see them raise money to continue de-risking the projects they have. It all depends on their particular situation. I own a couple of stocks that are in that situation. They've got multi-million ounces in the ground. They do have access to capital, but they haven't found that strategic partner yet. They're looking for a strategic partner, but they're in a tier one jurisdiction and they have a brownfield package and they've already proved up all these ounces and they proved in the past that they could raise money, but the market knows they need money now. And if they're waiting for us, I've got one stock in particular that's waiting for a strategic partner to give them to basically take a piece of them. Because like I said, they've got, multi-millions of ounces in the ground in a top tier jurisdiction, and it's a brownfield site. It used to be a top producing mine. And there's another company that I have that is in a situation where they're looking for a 50-50 partner for one of their projects. They have several projects in development. So it all depends on the particular situation for that company. But as long as they have the quality, the serially successful management teams that have done this before in markets like this, then, I wouldn't press the panic button and sell them to buy something that's already taken off.
Well, Dave, just along that line of thinking, and you've made that point before that sometimes right when you do that, when you sell the one that's not moving to get in the one that is moving, the one that isn't moving starts moving. So it can it can work against you. But there are certain companies that even though they are quality, let's just say larger mid-tier companies or some of the larger developers, they're quality teams, they are quality projects, but for some reason they just don't have the upside torque that other companies do. And there also are some companies that always surprise people every cycle that are, let's just say, the best of the worst. They're not that great of companies. Sometimes they're higher cost companies. Maybe their management team is the B team or the C team, maybe not the A team. But sometimes they'll just take off like a scalded cat and just go scorching higher because of trading momentum or because people see their margins increasing more on a percentage basis. What do you look at to find the higher torque companies in your portfolio so that it can outperform the GDX and GDXJ?
Well, what I've been doing lately, Shad, is I've added several juniors with U.S. big board listings that I've been following for a long time, that I've maybe speculated on in the past, had to sell for tax loss because I got in too early, what have you. But I'd like to have a few more companies with U.S. big board listings, because once the general investors finally starts to get into this sector, a lot of them have accounts where they can't trade on the OTC if they have a Robinhood account or something, and they can't they can't get into OTC listed stocks, they're going to go for the companies with the US big board listings. I've been pounding the table to these management teams that are in the process of de-risking. They're at the late stage process. They're either at the feasibility stage or they're at the finance stage, and they've yet to get a U.S. big board listing. And I really feel that if these companies, they've got a lot of cash and they're waiting to get a finance package or what have you, go ahead and spend the money and get that U.S. big board listing, because in the long, down the road, it's really going to bring more investors into your stock.
Yeah, that's a good point, Dave. And look, it ties in with kind of that focus on Western demand, which again, last month we started to see a little bit of a pickup in Western demand and some of the inflows into the ETFs. Let's talk time frame, because usually we hear the PDAC curse and how the market rolls over right after PDAC. It was the exact opposite this year, where the market already rolled over into PDAC and then turned around right when PDAC started. Now that we're starting Q2, first day of trading in Q2, actually second day of trading in Q2, seeing some better moves in, again, the silver stocks, and even silver outperforming gold. How do you look at this from a time frame standpoint?
Yeah, this breakout is so important, right? I mean, you could compare it to the breakout that happened at 500, which is right after I got involved in this sector in 2003. And one of the things I was looking at, right, 500 was the level that gold could not break above for 13 years, just like 2000 2100 was the level gold could not break out above for the past 13 years. Here again, this time around. And once the gold price broke out above, it had a monthly close above 500 in late 2005. The gold price ended up going up over 360% in the next 5 years. So this is the kind of powerful technical pattern this is that can take place after the breakout now has been confirmed. So, the first level that it can hit pretty soon, I wouldn't even be surprised if it takes place here in April, is the 2,500 level before we see a decent sized correction. But on the downside, we have to take a look at 2,150. There's important support there now. So, if we get below 2,150, then the momentum is going to shift lower. But I really don't see a catalyst for that on the horizon after this powerful breakout and the reasons for the breakout that has taken place here.
Well, Dave, did a 2,500 in gold and the sector momentum starting to pick up across the board. I just want to dive in a little bit more to what we were discussing just a second ago as far as what will have the most torque. When you look under the hood at a lot of these companies, they're not all the same. Just because they're a gold stock or a silver stock doesn't mean they're going to move the same way as another gold or silver stock. Are there any other things that you look at as far as the share structure? Does jurisdiction play a role? Do you look at things like what their margins actually are if they are a producer that you hold, and how that will change? Do you look at their quarterly reports? What else do you look at under the hood of these companies to see which ones will be outperforming? Because the whole idea is not to just bet on the whole sector, it's to bet on the companies that are going to win the race.
Well, if you're talking developer explorers, which is what I'm heavily in, then I'm looking at permit timelines, right? Credible permit timelines. Because if you're at the later stage of your project and there's not a credible timeline to be fully permitted on your presentation, then I think your share price is going to suffer. And also, you have to have that access to capital to finance it. But it's the permitting timeline that's a big one. And I've talked about this a lot with several companies that I feel that, hey, you need to do this. You've talked about permitting you've talked about permitting milestones you need to get in your presentation, but you don't have a credible fully permitted timeline. And I think that's what investors really want to see. And like I said, it has to be credible. Depends on the jurisdiction you're in. But if you take a look at, we've talked about this company before, and people know that already know that it's in my top 10, Montage Gold, right? This is a company that is similar in its getting its project fully permitted to Osino Resources, which we've talked about here, which was also a former top 10 company that myself and my subscribers just recently did very well in after it was taken over. So Montage is kind of in the same boat where they have this fantastic project in a jurisdiction where the permitting timeline is very fast. So they basically, their project, their Kone Gold project, is going to be fully permitted within the next 6 months. And you take a look at that stock price, it just continues to go higher. I think the RSI on the weekly is at 90, and it just continues to go higher because they've just got a capital infusion from the Lundin Corporation, one of the most serially successful companies out there in building in mines and running mines, and they've also got several other strategic partners in the stock. So you look at stocks like this where they've got access to capital, they've got a credible timeline to be fully permitted within the next 6 months, and they've got a fantastic project with huge blue sky upside in a very good jurisdiction in Cote d'Ivoire, which is starting to come on the radar of some investors.
Yeah, Dave, that Montage Gold chart has been really epic over the last couple of weeks as it's bolted higher, and I think it's because of exactly what you laid out, that other development projects like Osino had been picked off, and people see the writing on the wall for Montage eventually being bolted onto a larger operation. Let me ask you about the producers, though. There's, some good tips there on the permitting for advanced explorers and developers, but you also mentioned you're in a lot of growth-oriented gold producers and some silver producers. What do you look for in those companies that makes them shine more in your eyes than the other producers? Because there's a lot of choices out there. How do you narrow down, or what kind of traits do you look for in a producer that gives them an edge in the market?
Well, you look at their projects. Are they high margin? And you look at the same thing. I mean, you basically look at, do they have the access to capital to grow the company? Do they have a clear timeline on showing how their costs will lower over time and their production will rise over time? And are they in a safe jurisdiction as well?
So then, Dave, we've also seen an increase in M&A and some better M&A results too from at least corresponding share price moves after. All M&A, I think, is good for the sector, even if we argue that it is a take under. What are you watching? What have you noted in terms of the M&A front recently, either on the good or the negative side?
Well, we've had the ongoing saga of the OreCorp takeover. Perseus and Silvercorp were in a bidding war over this, and it looks like Perseus is going to win it. That's very positive for the sector. That was a very positive takeover. Recently, we've had a couple of other take unders announced last week, where Mako is a Nicaraguan gold producer, and they're taking over Gold Source Resources, which has a very attractive project in Guyana. So they obviously want to lower their jurisdictional risk at being in Nicaragua, which still has the sanctions on U.S. gold there. So, and then the other one was Argonaut Gold, which made a lot of sense, being taken over by Alamos, who has the Island Deep mine, and it's right next door, and it makes so much sense for the company to take this stock, for Alamos to take over Argonaut with just 5% dilution, and the Argonaut can spin off their other assets that I believe they were trying to sell and couldn't, their Mexican assets. They're going to spin that off into another company. But what was interesting about that takeover was, when's the last time that we saw a gold major or mid-tier announce the takeover of a company, of a junior with dilution, and both stocks rise? We had the Argonaut price go up to basically the takeover value, which rarely happens. There's usually an automatic arbitrage, but we also had Alamos go up 7% when it was announced they were going to dilute by 5% to take over the company. So this is very positive all the way around for the sector.
Well, and Dave, with M&A, you really want to see a 1+1 = 3 scenario where you see the synergy between the two make more sense than they do independently. And that's definitely the case with the Island Gold Mine and Magino together, because there's going to be a lot of efficiency saved, and it just makes sense to have one larger project. When you're looking at other potential companies that could be takeover candidates, do you look at that as far as, is there a major next door, or their location? Is it a strategic location that another major has messaged they want to expand into? Or do you think it's just kind of a fool's errand to try to look at who could be the next takeover candidate?
No, not at all. It's not a fool's errand at all. I mean, that's what you need to do in an environment like this, right? On the one hand, you want to look for these takeover candidates, but once you get into them, on the other hand, you don't want them taken over too soon. You want them to see them be able to develop, this thing as far as they can on their own, and then get taken over for a nice premium as far as your investment is concerned. Because we're in it for as far as I'm concerned and my subscribers are concerned, 3 to 10 times upside before I even consider getting into something. That's what the stock has to have in a takeover situation. So like I said, on the one hand, it's nice to have a takeover, but if it's taken out too soon, that's not nice because you've done all this research, you've done all this work, you've accumulated the stock on weakness, and now you've got a full position. You're like, okay, now I'm holding for like 8-10 bagger gains here. When the gold price is in a rip roaring bull market again. Well, a company might come along and take it over early, which is fine, but it's always nicer to get those huge upside gains. And then of course, you can always just take the money and put it into something else that is yet to take off. That's why you have to have a watch list. And that's what I have, for my subscribers as well. I have a watch list of 20 companies that I'm ready to get into to one or two of them once I have a big win with something.
All right, Dave. Thank you very much for your time. I mean, look, there's a lot more positive to talk about for this sector, and we're just over a month through this turn. Right now, we're already at overbought levels for the metals and a lot of the stocks. That's a good thing, though. That does show that there is interest and that bull market does have to hit all-time highs. So, look, we're seeing better moves across the board here. Hopefully, people aren't getting too scared because these things have started to move because it is still very early on. Look at the longer term charts of GDX, GDXJ, and a number of these stocks. Still a lot of room to the upside, and the follow through starting in Q2 already. We'll be chatting again next week, Dave. So hopefully more for us to talk about, maybe some more company news, as well as some updates on the metals price. Dave, thank you very much for your time. Have a great rest of your week.
All right, guys, you too. Looking forward to it.